Are you in debt and want to get out? Now, this debt might feel overwhelming to you today, but I'm going to tell you exactly where to start. But stay to the end, because for my number one strategy to get out of debt that helped me dig out of $1 million debt hole and get out of the rat race and be free. All right, so number one, start tracking your money. Right? I say this all the time, right? But start really tracking your money. Understand how much money is coming in, how much is going out. Understand that whole money flow, what's really happening with your situation. Unfortunately, most people don't do this. They just kind of look at their bank account balance and say, is there enough? Okay, if there's enough, I'll pay that bill. But then all of a sudden when something unexpected happens, or maybe it's something that's not on a monthly basis, like once a year or something like that, they'll say, oh no, I gotta hustle to get some more money. And then they all of a sudden go out of whack, maybe they have to go into some debt, and that's why they don't get out of debt. Track your money on a weekly basis. I recommend using tools like Mint. Mint is a great app, or you go to mint.com to use that. But Mint can actually help you really organize yourself, really understand where the money's going, and then you can actually decide, should I be cutting back on some of these areas? I'm not saying go live on rice and beans. Don't get cheap. Don't be such a tightwad that people start saying, oh, I can't even be around this person because they make me pay for their dinner or their lunch. No, don't be that person, right? But start to really track your money and understand where it is. I can promise you from working with hundreds and hundreds, almost 1,000 clients, that we've seen that when people start tracking their money, they find, without even going cheap or sacrificing their lifestyle, they usually find at least $300 to $500 a month that they had no clue they were losing in the first place. That's big, guys. That's huge, especially if we want to apply that to getting out of debt faster. I would love to hear some of your strategies too. By the way, comment below, what are some of the things you're doing to track your money or maybe even helping with your debt situation? All right, number two, you can refinance your loans or negotiate lower interest rates. You probably didn't realize you had this kind of power and you didn't realize this was possible, but you could be refinancing or negotiating lower rates. Now, refinancing may or may not be a good thing right now. As rates have gone up, you might think, oh, this may not work. This may not be the best thing for me. But I'll tell you, there are some rare occasions where I've seen a refinance work even with higher interest rates. For example, just recently we had a client where she has an interest rate on her mortgage of less than 3%. Now, she's on track to pay it off in 10 years. However, she's got a lot of equity in that property too. We can take that equity, we can actually use it to invest, and get this. It can actually help her make an extra $600 a month above and beyond the new refinance payment, even though she has a higher interest rate. So she's making more than $600 a month on that mortgage that she can either apply to the mortgage and still pay off early, or even better yet, she takes that money and reinvests it, plus she's already buying real cash flowing assets like real estate with it. As that grows and appreciates over time, she'll actually have more than enough money to not just pay off that loan in probably about not 10 years, but actually pay it off in about 6 to 7 years. And even if she doesn't do that, guess what? If she keeps going 10 years down the road, she'll probably have about $5,000 to $6,000 a month of passive income anyways. So she may not even want to sell it off to pay off her house. So that's the thing, you can do those kind of things. Sometimes refinancing does work in higher interest rate environments, depending on the numbers and on where you are. You can also negotiate lower interest rates. You can actually call up your credit card companies and just ask, hey, I'm getting offers for lower rates right now. What can you offer me? And just ask them, can you give me a lower interest rate than what you're doing? Negotiate those down. You can negotiate terms. Same thing, you can do a car loan. Maybe you can't get a lower rate, but maybe you can extend out the period on that car loan to save yourself more money, and then take that extra money you've freed up per month and use that to pay down other debt. Same thing, if I use that same woman that was refinancing her mortgage, she could take that, if she had other debt that we could pay on, she could take that $600 a month, pay off credit card debt if she had credit card debt, right? She can actually get out of debt much faster by renegotiating and moving money around. I'll give you one cool story. I had a guy that was from Manhattan. He definitely talked like he was from Manhattan, right? A fast-paced talk kind of guy, very blunt to the point in your face. This guy was really not even paycheck to paycheck. He was worse than paycheck to paycheck. If he were paycheck to paycheck, it would be an improvement for a situation. I even told him that in the beginning. I said, if we can get you out of the hole of being a couple $1,000s a month in the hole and get you to actually being just paycheck to paycheck where you have no extra money per month, but at least you're not going more in debt, this would be good. He was sinking fast. He knew he was in trouble. Well, we did some of these things. We helped him refinance and negotiate some lower rates, extend out the period of time on his payments, freed up more money, and guess what? He did it. He actually got to that point. Now, at one point, he got really mad with me. He said, Chris, all you're doing is just moving money around. Yeah. And of course, since he's a New Yorker, he's blunt, I decided to be blunt back, even though I'm more like a West Coaster or Midwesterner. I kind of came back, fired back at him. I said, listen, you got no money. Unless you could pull money out of your butt, this is the best we got to work with. And you know what? We did it. He finally calmed down, did it, and at least got him to the point where he's paycheck to paycheck. He can at least struggle to breathe. He was at least treading water instead of drowning. That's what I want for you too, is at least at best, at worst, I should say. At worst, I want you to at least be able to tread water. At best, thrive through this as you're paying off your debt. Now, here's one key thing to learn too. When it came to paying off debt, focus on just one debt at a time, one loan at a time. Don't do the whole, I'm gonna throw a little extra on all these different loans all at the same time. It doesn't work. It's like trying to put out a fire with a little sprinkler. It's just better to channel it into a fire hose, put it out fast, move on to the next fire. That's what you're doing here. Pay off only one debt at a time. By the way, bonus tip here. Do not make extra payments on mortgages, car loans, or student loans. I repeat, do not make extra payments on mortgages, car loans, or student loans. Why? Because those kind of loans, those are installment loans. When you make payments on those loans, the payment remains the same until it's paid off completely. So if you pay extra money onto your mortgage payment still remains the same payment. If you do that, the problem is now you've locked up your money, it's gone out of your life, but your cash flow situation does not improve. I would instead have you focus on paying off those things that are like credit cards, right? Those things that actually will go down in payment as you pay them down. Doesn't mean you're gonna pay less, right? You can still pay bigger payments, but it's nice to know that the required payment goes down. That frees up cash flow month after month after month, making your ability to breathe easier. This is one thing we did with that guy. Ooh, another bonus tip. We actually used credit cards to pay off other credit cards that had a better cash flow index, which is gonna be my number one tip I'm gonna teach you to use coming up right now. By the way, if you like this, please subscribe, like this video, share it with others too. If they're trying to get out of debt, this is key, because what I'm about to share with you is the way I was able to dig out of $1 million plus debt hole and be able to come, not only just do that, but later became financially independent, where I was out of the rat race. I had more than enough passive income to retire in 2016 when I was just 39 years old. And that was after getting my butt kicked in the recession. So moving on to the cash flow index, what is it? Well, when I was drowning in debt, I was up late at night trying to figure out what to do. Do I take whatever little bit of money I have to invest and create passive income, or do I pay off this debt? And I had to find a way to compare them. And I started looking at what's the rate of return, which one pays me the most month-to-month cash flow. Now, paying off a debt gives you guaranteed cash flow, it's good, right? Where an investment may or may not, there's risks there still. And so I started looking at debt like an investment. And instead of just focusing on the interest rate is a deceiver, right? There are some 0% credit cards out there that, believe it or not, actually cost you more money than the ones that charge you interest. They're actually more dangerous to have in your cash flow situation. So the cash flow index is simply this. You take the loan balance of that loan and you divide it by the minimum monthly payment, and you'll get the cash flow index. For example, if you have a $10,000 credit card, that's $200 a month, that index is a 50. But let's just say you also have a $10,000 car loan that's at a low interest rate, but it's $500 a month, that index is a 20. Now look at this from a common sense standpoint. If you're trying to make sure you free up more cash flow to keep yourself in a better, healthier cash flow position, which is what the banks want for you anyways, if you want to be in that position, do you really want to pay off the lower payment, or do you want to pay off the one that gives you has the bigger payment? Of course, common sense is to say, get rid of the big payment so then we can manage the small payment. Well, guess what? That was that low interest car loan. But I was always told by Dave Ramsey, pay off that credit card, pay off the higher interest rate. You could, but guess what? That's not the one that's gonna move the needle enough to make a difference. You could do that, but better off, pay off that $500 a month car loan and then take that $500 and you can apply it to the $200 a month credit card, which will end up getting paid off in less than a year. The interest is almost negligible because you pay it off so quickly. It makes more difference if it's paid off over 30,000 years, but when it's just over a matter of months, it hardly makes a difference. And you end up paying off both anyways, but you're in a healthier cash flow position, paying off the lowest cash flow index. Because remember, the car was a 20 index, while the credit card was a 50 index. Pay off the lowest first, especially if it's 40 or lower. Those are the ones you want to pay off first. The other ones, look at ways to refinance. Mortgages, for example, should be at 200. Right around a 200 is what a mortgage payment should be. So those are the key ones you want to use. That cash flow index, by the way, it's not only made me a lot of money and saved me literally hundreds of thousands of dollars, but it's helped our clients be able to renegotiate and be able to get to a place of paying off their debt faster, getting their cash flow in a much healthier place where they're able to be not just debt-free, but they're able to actually use their money in wiser and faster ways to create more passive income. So guys, I hope this really helped you a lot. If you like it, click like. If you also like about stocks, if you're interested about investing in stocks, especially if you're a teenager, check out this next video, how to invest in stocks as a teenager.